Good evening, everyone. Welcome to Admiral Markets. My name is Chris, and together with Nennet, we together are going to take a look at selecting the optimal timeframes for your trading, and we're going to take a look at how you can do that. What kind of factors are important to think about when deciding which timeframes to trade, either permanently or for that particular trading day slash week or month. All right. So a bit different time than usual, by the way, as you might have noticed. 45 minutes later. It's going to be like that for the month of December only. The webinar is on Wednesday evening and Thursday evening at 5:45 GMT. So before we dive into today's topic, be aware that this webinar is intended for a global audience but may not be suitable for everyone. Take a look at this link, admiralmarketsglobal.com, to find out more information about that and whether it is indeed suitable for you and other details. Select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, I just want to ask you if you can hear me properly. Is the sound okay? I had a bit of a tech issues earlier this week on the live webinars on Tuesday, Wednesday, so I'd like to double check if everything is okay. In the meantime, let me explain that these webinars are hosted by and sponsored by Admiral Markets. So take a look at admiralmarkets.com after the webinar. You'll find information about, for instance, the Premium Edition, with a lot of extra features, 50 plus extra things that make trading life a bit easier, like an alarm manager, the matrices for correlations, sentiment, and also a lot size calculator. So a lot of good stuff there. Great, thanks Al for the confirmation that the sound is good. So I got a couple of slides here I want to share, and then Nennett will take over and share his 2 cents on the same topic. But the first thing I think that I would like to explain is basically the time factor, right? That's one of the important things when trading, I think. So definitely connected also to what time frames we trade. Let me explain. First of all, your time availability, either, of course, in total, and also how you can divide that in the week. Let's say that you have 10 hours to spend on trading, but you can do that only on Monday, just to give a wacky example. Well, then you probably will not be wanting to swing trade because you cannot, or at least not swing trade with an open management kind of style, or a style where you're heavily managing the trade throughout the week, because you cannot, obviously, right? So it depends how much time you have and how you can allocate that time. We'll dive into that. And also, how long do you want to really stay in that trade from a psychological point of view, perhaps? And what do you consider the longest kind of period that you would really want to be in that trade? So that's how time kind of kicks in two different ways, at least, maybe more, but these two for sure, in how you want to select those time frames. And then I'll dive into more of my criteria. A swing trade basically is a trade that's open for a bit longer period of time. Definitions vary, but for instance, a couple of days could already be considered a swing trade, up to a couple of weeks. So that bit depends. You can even have a swing scalp where you're basically, staying in for a few hours. So, normally speaking, of course, if you're trading open and close within the day, it's an intraday position. Swing is normally speaking more than a day, 2, 3, 4 days is a swing trade typically, overnight. So, all right, how much time do we have and how do you get a copy of my MT4? You can go to admiralmarkets.com and go to, I think, one of those buttons that says start trading or something like that. We can take a look actually. You need to go to trading platforms. All right. So how much time do you have for analyzing charts, for scanning the setups, and for managing those open positions? We certainly don't want to run out of time. The depending on those answers, you can decide what time frames make sense. For instance, if you're trading full time, obviously you can do multiple time frame analysis. You don't have to necessarily choose one. If you have time in the mornings, 2 hours a day, maybe that's good for trading the daily charts, or 8 hour charts, or 4 hour charts, right? Because you only have that particular time slot probably per day to analyze, scan, and open trades and manage those trades, right? So you're not going to be uh, probably not going to be trading on the 4 hour chart that much or the hourly chart that much, right? Because you're looking at higher time frames, probably like a weekly and a daily, maybe the 4 hour just for entry purposes. But if you have basically, you could look at the charts every hour because if not even if you're a full-time trader, but just because your work environment is so flexible that you can look at your mobile or tablet or even PC, that gives you more options for managing your trades, and you can keep an eye on the market more intensively, which means you'll be able to trade lower time frames. So that's something you want to keep in mind. Also, what do you feel comfortable with trading? I mean, in the sense that what do you feel really comfortable with, like from a psychological point of view? Do you really want to stay in a trade that's open for 2 weeks? Many will probably say no, right? Too much, too long. So from that point of view, think about what you feel that is pleasant for your trading, and think about that answer. And if the answer is anywhere in this row, then you might have an idea what could be the best or at least a reasonable time frame for you. Doesn't have to mean, by the way, that that's the only time frame you have to use. But it could give you a bit of idea how long you have to stay in a trade typically with these time frames. And you can see that it quickly goes up. If you're using an hour chart, you're typically looking at 1 or 2 days easily, really, even 3 days. That could be already, depending how you manage the trade too. Obviously, you can trade an hour chart and still get out pretty quickly, depending on the exact strategy and rules and stuff like that. But if the barring those examples, of course, typically you do have to keep in mind that that could happen easily. So from that point of view, if you want to trade intraday and get out within the session, then on average, you probably want to think about a 15-minute chart, max a 30-minute chart. These are just rules of thumbs, maybe, that you want to keep in mind. Alrighty. Also important is what kind of targets you have in mind. If you have lower targets in mind, no, if you have aggressive targets, first of all, sorry. So you really want a lot of opportunity because you're looking to, uh, let's say, relatively aggressively grow your capital. Let's say you're in an account building stage where you have relatively low amount of capital, but you're willing to take a higher risk with that because you want to grow it to a size that you think has more potential for maintaining, let's say, a more risk conservative approach. Let's say it this way: someone's trading with 500 euros. It's not enough really to make a living off the 500 euros. So that trader decides to aggressively trade, uh, higher risk percentages, not the typical maybe half or 1 or 2%, but maybe 3 or 4, even or even 5 sometimes, and that's high risk, of course, but just to be able to grow from a 500 to a few thousand so that the account has more muscle in a way, right? So if you have that kind of intensity, then obviously the lower time frames will offer more setups. The disadvantage is that there'll be the more setups we try to catch, obviously we're going to bump into less quality setups, and that could lead to kind of disadvantages of psychology because we're going to have emotions tied to all those setups. The more setups we take, the more likely we're going to bump into revenge trading. We're going to think about over trading, chasing trades just to get back the profits, get back into break even, reduce the losses. It's just more difficult to maintain that status quo where we're in balance and dominating kind of our game. And it's easy to lose grip, easy to lose patience, and get in a negative spiral. So from that point of view, that's the disadvantage. But obviously, yes, if you're looking for more opportunities, a monthly candle is not going to give that. Why? Because well, there's only one a month, so there's not going to be a lot of opportunity. So if you want a lot of opportunity, it's got to be either many pairs, many currency pairs, or many time frames. If you're looking for milder targets, you could be a bit less aggressive and a bit more demanding in the quality of the setup, and you could wait for moments that have a bit of higher, uh, win percentage likelihood, a bit better, more confluence, just in general, a higher chance that the setup will turn out and materialize. You can be a bit more strict with filters and stuff like that. So that's the advantage, and you can be basically more demanding in what you trade, and be in a position that you're like looking at the market and say, okay, I don't need a trade now, but if I find one, great. That gives a kind of mental ease because we're not in need of a trade. Traders that are in need of trades, uh, just as it's difficult to avoid kind of being biased to take a trade because we need it. So we're trying to force it a bit. So if you have milder targets, you can control that a bit better and you get more quality and be in balance a bit more. Other things to think about, news events. When I see big news events, I'm automatically I'm more careful with trading bigger time frames because to be honest, those big news events can have very big effects. Well, we saw it today, didn't we? Euro dollar flying up from 105.20. I think it was close to 110 when I last looked. Let's see where it is now. 109, sorry. I think it had a high of close to 110. Let me check. 109.40. Well, close enough. I mean, 440 pip update so far. So let's see where it closes. Let's see how this daily candle shapes and turns out. But probably it's going to be bullish, right? And that had everything to do with the news event. The euro dollar didn't move anywhere in the last couple of weeks. Just slight kind of trend to the downside. And a news event like that, boom. Obviously, if you look at monthly candles, you wouldn't even expect maybe this upside to happen. But if you look at the news event, we knew that when Draghi is speaking that he's going to unveil his plans, and it wasn't as the market expected, and boom, we see this big upside. So what I mean is that to be able to see this kind of movement, you really have to look at lower time frames, really. Otherwise, you really don't know what's going on. If you look at the weekly chart, you just see price, a big candle perhaps, but you have no idea what happened in that kind of time frame. All right, so when a news event is over, then the news event is a standalone kind of event, and once that is over, we can go back to kind of normal technical trading and capitalize perhaps on some movements if the technicals look good. And that could potentially be done on lower time frames, but be careful, as always, with those news events. When there's a quiet week, when there's not many news events going on, when there's not a Fed perhaps raising the interest rate, well, then higher time frames are, I think, a bit better, like swing trading, like an hourly, 4 hour. It's a bit easier to use those because we know that a news event isn't going to like rock the boat all too much, and we can stay in a trade for a few days. For a position trade, you might want to think about it too, but I don't think many of us are really position traders here when you're trading for weeks and weeks. But if you do, even then you want to, of course, be aware of these big events that could happen. But that probably will not deter you of trading. Alrighty. So news events, you can also, of course, trade different currency pairs and check the calendar and fundamentals. Alrighty. Obviously, the market has a lot of influence as well. How does the market move? What kind of situation is going on right now? when we're looking at the market structure, when we're looking at what price is doing, how it's moving, etc. Very important. So, volatility. We want preferably a market that's volatile, but not crazily volatile in a way. Yes, maybe I'm picky, but that is the best. If it's too little and market is flat, then might not be that interesting for most of us. Unless maybe you're a particular scalper that really likes tight support and resistance zones and likes to trade from the top or bottom, maybe that's something you like. Most of us would like kind of a medium to high volatility range where we have a pleasant kind of movement, but not crazily like perhaps today. All right. So that's ideal. So what you can do is actually go to Animal Markets website, and you can go to Analytics and click at Market Heat Map, and it will show you the volatility of the pairs. We do that almost every time on the live webinars on Tuesday, Wednesday. I'll get back to you in a second when that's loaded. 1 second. So that's something you can use, all right, when looking at which currency pairs are interesting for today. Ah, there it is. Right, and you see pound Swissy, big mover, but maybe too much, right? Maybe a Swiss yen, New Zealand Swissy, or a pound dollar are a bit better because they are less volatile, more in the middle. But you can use this easily to filter out perhaps some of those pairs and concentrate on those that seem more interesting. All right, obviously trend and momentum. I like to trade with momentum. I like to trade with the trend. But if you like to trade reversals, then or corrections, then you would be looking for those environments. It depends what you want to trade. I like to trade trends and momentum. Doesn't mean that you basically would be like that as well. But if I like trends and momentum, and if you do too, it makes sense to look at timeframes that have that trend, that have the momentum, obviously, and skip the ones that don't, right? So when price is in this kind of correction here, I would be skipping this pair unless it breaks this trend line. Right, so that's I would be skipping this time pair and time frame, I should say. Right, so that's I think pretty straightforward. Oh, sorry about that. Seems like I was using my drawing tool and there we go. It's back. Sorry about that. All right, next slide. Other important things: patterns and support and resistance. Basically, when I look at the market structure, I see three things. I see trend and momentum. I see support and resistance. And then often you see trend and momentum facing and being challenged by support and resistance. And then the question is, when there's momentum running into a strong support and resistance, which one will win? You know, the momentum can break through the support, for instance, or resistance, or will those levels be strong enough to stop momentum and we will see a bounce? The third thing that I think is important is patterns. That gives us also a clue about which will win, momentum or the support or resistance. Patterns will show flags, head and shoulders patterns. They will show triangles, wedges, and that gives candlestick patterns, time factor patterns, Fibonacci patterns. Those give a lot of indication as well about the future potential of future movement and potential movement of price. So these also help me decide which time frames I like. I did not personally like this pound dollar break of this trend line that much. I was saying in the live trading, well, I was wrong. It fell a lot to the downside, but those things sometimes happen. In general, though, I like trend lines like these and wedges like these in the blue lines I'm talking about right here. Somehow my drawing tool isn't working anymore. I'm not sure why, but and yeah, these blue lines here in the middle. And generally, those are good indications of patterns, right? And that shows to me whether I'm interested in trading that 1 hour chart or not. Typically, on average, not this time, most of the times, if it breaks a trend line, for instance, I'm interested. Uh, or sometimes if it bounces at the trend line. In this case, I was not interested in a bounce, but in a break. In this case, I would normally be interested in a break, not a bounce, because the zone is too tight. The zone is too small. And too unsure to trade in that particular boundaries. All right. So I was looking for the break to the upside, for instance, or perhaps to the downside. Actually, I was interested in the break of 150. And there was indeed some acceleration below 150 for about 100 pips further down. All right, other things. Your strategy is also very important. What type of strategy do you have? Because that could have a big influence. If you're trading chart patterns, I personally think you could trade it on all time frames. But there's certain things, certain tactics or strategies that do not make sense to trade, and on certain time frames, like candlestick patterns. I don't think, as a standalone strategy, I don't think it makes sense to trade on lower time frames. I wouldn't recommend. I've never tested it, but I doubt it that it's going to work. Is trading random 15-minute pin bars on a 15-minute chart, obviously. No, I don't think that's going to work. Right? But trading pin bars, for instance, on 4 hour chart, daily chart, weekly chart, I think have a lot more potential. So if your strategy is trading pin bars, then I think that makes sense. But take a look at what kind of rules you have for those pin bars. And also, I think, indeed, choosing high time frames would certainly help with that. So I would not select time frames that are lower than 4 hour on this particular kind of style of trading. So that's also important when selecting your time frames. Moving averages, I would not use daily or weekly. Why? Because well, I have nothing against it, but it's just will take forever before a setup happens. Too slow. So I would use more the medium time frames for that. When I use Fibonacci, basically I could use it for all time frames, depending on how I use it. If I use it for entries, I would use it for lower time frames, 15, 30, hourly. If I use it for a filter or a potential bounce spot, I'll use it on a 4 hour or daily chart. News events. Obviously, if you're trading news events, probably, as far as I know, people look at 1 minute charts. I don't trade news events, but this is what I've understood from other traders. Other things to consider. I call this model TOFTM. It's an abbreviation for 5 things. Let's talk about it. Trend, the T of trend. Obviously, when looking at trends, I choose time frames that are typically one higher than I really want to trade on. So if I see a good chart pattern on the hourly chart, if I see a good triangle on the hourly chart, I would zoom out to the 4 hour chart and see what is the trend? Is there a trend? And if it's down, I might consider skipping the upside break and trading it to the downside instead. That could help with time frames. What is the opportunity? It's the second part. The opportunity could be divergence for a reversal trader. It could be a retracement on the AO to the zero line for with the trends traders, like here, where I have my arrow. It could be a bear flag on a 15-minute chart. Filters. Then typically I zoom out to one time frame higher than the trend. So if I'm looking at the trend on the 4 hour chart, I'll look at the daily chart for filters. Is there anything that's disturbing about this setup? Is there anything warning me that maybe the setup would not go well? Obviously, if you have very strict rules to your trading plan, you already have that exactly written down. Or maybe you don't have filters at all. I don't know. Depends. If you're a discretionary trader, you might want to list at least what things you want to look at. A big trend line, a big fib could all be reasons to skip a trade. A trigger basically, and this is a little difference with the entry method, because there's a slight difference, is like if I want to trade at this fib, for instance, right? The 61.8 fib, but I don't want to enter right at that fib. I want to wait for price to respond to that fib. Then in that case, the fib is a trigger and the entry could be a candlestick pattern. If I enter right at the 61.8 fib, then the fib is an entry. If I wait for price to stop at that fib, or to stop at the trend line, or to break a trend line, then those tools are the trigger. And then last but not least, obviously, we don't have to choose only one time frame. When choosing time frames, excuse me, when choosing time frames, we don't have to necessarily single out one time frame. As already explained with the Tofton model, we can focus on two or three particular pairs, time frames that look interesting. There are a lot of time frames we can look at. Some time frames will not be interesting. One particular pair might have a horrible weekly chart, might even have a daily chart that's not that interesting. But if the hourly and the 4-hour are showing a strong momentum, might still be worth trading on the 50-minute chart, right? Even though it's not worth trading on the weekly. So that's still definitely possible. You can also choose a different currency pair, obviously, but trading multiple time frames is still very much possible. And you can kind of like look at these factors or criteria I just mentioned and try to zoom in on the two or three perhaps time frames that are the most interesting for that pair. So all in all, what I do is I try to identify a decision zone. Where would I like to trade it? And then I look at patterns, I look at support and resistance, I look at trend and momentum, and make a decision when price does get to that level, how do I want to trade it? Then I look at one time frame higher and one time frame lower for filters and entries. That's typically how I approach the market on average. I'm a more discretionary trader. That's why I say on average, because I look at it from a case to case situation. All right. So let's go to the live charts. Okay, what kind of decision zone am I talking about? What is a decision zone, right? What are your dollar, for instance? Let me get rid of this fib. On Wednesday, I said there were a lot of factors that I thought could make this euro dollar go up. Now I know, of course, and I realize very clearly that my analysis is not the reason why it went up. Of course, it was the news event. But in my opinion, the technicals were showing that the euro dollar had a good chance of bouncing up. Will it happen? You never know. Obviously, if the ECB would have chosen to be more aggressive in its monetary policy, well, the euro would be weakening tremendously, and my analysis would not have been that important that it would go up. But I also identified which zone I would like to see price go through, right? For downside, I think would be interesting. 150.50 was important. 150, what? No, not 150.50. 105.50, 105, and then the bottom at 104.50. Price broke through one of the three during the news event in a kind of odd way because of the news events that were not totally like there was some news releases that didn't really match what actually the ECB wanted to do or something like that. Well, I'm not totally aware of the exact details, but there was some volatility that had to do with the news being released a bit earlier and not precisely how the ECB wanted, I think, or was about to announce it. So there was a bit of confusion there. So that caused the up and down perhaps. But my arguments were the falling wedge, the triple divergence on the 4-hour chart, the yearly low at 104.50, the falling wedge chart pattern, the 88.6 fib. Those are a lot of reasons. The potential for an ABC correction to the downside. a lot of reasons I saw that price could bounce at this level, could. And well, if the ECB would have said differently, that probably would have broken through the bottom. Who knows? Now, of course, there's still a chance price could go to the blue bottom later on with the Fed decision mid-December. But at the moment, with such a bullish price action, let's see, of course, how this daily candle closes. But I would expect a bit more follow through of the upside until maybe we hit some resistance. We could put a fib on that candle, I would say. And I would expect a pullback to the 23.6 fib, for instance, and a continuation up to the minus 272 target at, I would say, the very minimum. All right, could go even higher to the minus 61.8 target, and then we'll probably bump into some resistance there, and we could see some downside again, and we could just stay kind of in this zone and stay in this sideways kind of consolidation area until, of course, the next important pivotal moment when the Fed has to make a decision about their rate. So let's see, we got a question. What type of filters do I check on high time frames? And if I'm trading to the downside here, then I would filter that out. That's why I didn't trade it this week to the downside. Because from my point of view, there were too many kind of filters blocking that trade, like a big bottom, like support, like a trend, like a chart pattern, a falling wedge, trend line as well, or a big fib. So I have a quite discretionary style. Not everyone likes that, and I can imagine so, but that's just how I like to trade. First of all, you have to have pleasure in trading as well. It's important, and I like that. I like the waves. I like to make that analysis. Um, so I use all these tools that I already use, like moving averages, like fibs, like trend lines, like an oscillator. And if you want more info on that, I would recommend looking at the live webinar in that case, because that would take too long to explain. Yeah, it definitely was a crazy day, Lau. Definitely, 400 somewhat pips. Definitely a biggie. All right, so that's my thoughts about that. I might tomorrow think, oh, I forgot something, but that's what I thought of today. At the moment, that's how I look at the week and say, okay, this is interesting. This time frame is interesting. This pair is interesting. I'll keep an eye on that, or I'll skip that. Now let's see what Nenad has to say about this topic, and he'll share his views on how to look at time frames and how to pick the optimal time frames.
Thanks, Chris. Yes, I will continue with the presentation, and thank you guys for listening. It was a really a huge day today. You could have seen that euro dollar hit 10520, and then it proceeded almost 500 pips to the upside. So we are basically now in a small uptrend, but let's see if it will last until Fed's decision. So probably if Fed decides to hike rates, we could sell again. Until then, we need a retracement, else there is no trading euro dollar. It's too high to buy it at the moment. As I say, it can go even higher, but really I don't advise any trades at this point. So stay away from the market until it calms down. Okay, so you can see on my screen it's time frame, various time frame explained, and how to select time frame on live chart. I will show you the exact thing about the time frames. It really depends. It really depends on your strategy and your free time. It's not, for some people love to scalps, other people love to swing trade. So you will see the benefits and disadvantages of both ways. So before you even start to trade, you need to decide about time frame, because it will be important for your trading. It's not the same as if you were trading on 1 minute and 1 day time frame. It's totally different. So depending on the time frame chosen, you need to decide also which risk you will use. Obviously, guys, if you use a lower account and you have lower account and you want to take some trades to, let's say, to some point where you want to double your low account, for example, trading $100 account, you want to double it to 200. Well, to be honest, it will be hard to do just with the scalping. So probably you will need to do one position trade, and if it goes your way, you can double your account in, let's say, 2 days, 3 days. It will definitely be different if you have more money to trade, let's say $5,000, $10,000. So you won't be able to double your account that fast. So it's also about the time frame. It's about your actual strategy. You need to define whether you want to be a day trader or scalper. You want to do basically a swing trade or a scalp trade. You want to be a trader or investor, because if you want to be an investor, then you will not trade the daily time frames. You will trade weekly or monthly time frames. But that is not trading, guys. That is basically investing. So it doesn't have to do much about trading, indeed. So those things are very, very important when you want to decide about your trading. So whether you want to be investor, you day trader, scalper, everything is different. I prefer to be a day trader, and really sometimes I can hold my trades for a couple of days, but that's maximum. I don't want to carry trades over the weekend, although it happens sometimes, but I really don't like that. Also, I don't like to invest because I'm not able to concentrate on monthly time frames. It takes really too much time just to look at historical resistance, because when you open a trade on monthly time frame, guys, the trade can take for years, because every candle is a month, right? And 12 candles, guys, on 1 minute it's 12 minutes. On monthly it's 12 months. So I don't like to do it, because I'm really not favoring any long time frame investments, because things can change, and those changes can erase your yearly profit in just a matter of hours. So that is why I will show you. You all probably know that yourself. Euro Swissy trade famous. It can happen. So just imagine traders who had huge profits during the same year, and then their profits were erased in a single minute. So it's a bit frustrating. Okay, for me, for example, it's a lot easier, guys, to concentrate and focus on intraday. Even if I lose a trade from time to time, it doesn't matter. You know, it's fast. You know that you lost a trade and you can continue. But just imagine that you were trading monthly time frames and you lost a trade. And definitely that is something which can make you really, really, really frustrated. Now, scalping 1 minute or 15 minute or 5 minute time frame, you will have a lot of chances to trade. So if you want to be a scalper on 1 minute or 5 minute time frame, know that you will have really a lot of chances to take a trade. Also, there is a less chance of losing trades if you want to take 1 or 2 pips. Okay, that's okay, because usually your trade will go in your favor. 1 or 2 pips, probably it will go in your favor. No overnight risks. You open your trades, you close your trades very fast. Spreads, you will have more cost to pay, because every time you open you will have some costs. So 1 or 2 pip will not do any good, because you need to cover for the costs. It's very mentally difficult, because your bias will change. You might think euro dollar is going up, now it's time to sell because it's rejecting from historical resistance, but it proceeds to go down, up and up. So you change your bias again, so you can really be very, very confused, and your profits will be limited. Now, obviously, when I say less chance of losing trades, if you want to get higher number of pips, then your chance to lose will get higher, because scalping is scalping. You know, guys, when you scalp, you are not meant to make 20, 30 pips. It's scalp swing. When you scalp, you want to take something like 2, 3, 5, 8 to 10 pips. So I don't like it. Scalp swings, 15-minute time frame, it's good. It's okay. It's something in between intraday trading and scalps, something in between. Because you will, with scalp swings, which we occasionally do in our recap trades, you will get from time to time good trades. You will get 20, 30 pips, which is like double the scalping potential, because scalping potential is around 10 pips, right, on average, sometimes even less. But with scalp swings, you can take at least 20 pips. And a lot of trading opportunities you will also have. Less chance of losing trades because, okay, you are doing it with a stop loss of a scalp, but you exactly want to swing a trade. No overnight risk, slightly bigger targets than scalping, which is great. Spreads, you will have more cost to pay, and you need to constantly babysit your chart. The minute you leave your chart, your trade will probably end up in a loss. Why I say less chance of losing trades? Because when you scalp swing, you will use profit stop. So instead of taking 10 pips, every time price gets above 10, 15 pips here in favor, you move your stop. So it's okay, much better than strict scalping. Now we come to intraday trades. It's 1 hour time frame, suitable for both full-time and part-time traders. Less chance of losing trades. Targets are substantially bigger. You can use trailing stop. There is overnight risk because sometimes your 1 hour trade can become a little bit stuck and you need to keep it overnight. So you will have your overnight risk. You will be also, this is funny because very often it happens that if I don't exit overnight, my trade ends up in a loss, which I really don't like. For example, you have your trade and suddenly during the night Asia session just reverses your trade, it hits your stop loss, and then at the London Open your trade could have been in profit. And it usually happens if you try to make an intraday trade also an overnight trade. It happens. I really know that it can happen because many times I have tried to carry over the trade on 1 hour time frame, and it's much better that if I had carried it over on 4 hour time frame. That is why I occasionally use 4 hour time frames, guys, in my analysis, because usually those 4 hour time frames you won't be stopped out. I'm not saying that it happens always, of course not. But if I have 80-20 success ratio, why would my success ratio drop to 60-40, let's say? It's about that overnight risk, and sometimes the price can, as I say, hit stop loss and then proceed in your direction. And that is something which can happen when you do it overnight. But then you need to babysit your trade or exit overnight. The remedy for that is, okay, use profit stop. Use a trailing stop if you want, but I'm not, my computers are not running 24/7. I also need to sleep, and I don't like to sleep and when I know that everything is opened up, every single chart, whatever. So I tend to exit overnight. So usually those intraday trades which have great potential, if I exit overnight, my profit potential drops a little bit because I put my profit stop. So instead of taking 50 pips, I take 20 or 25 pips, which is not bad. I'm not saying it's bad, but you know, it has some risk. Then you need to pay for swap. Okay, it's overnight trade, and swap is usually negative. It can be positive, of course. You need to check the table for that, but usually it's negative most of the time. Now swing, okay, I'm saying that you can also do an intraday trade on 4-hour time frame. So intraday is either 1 hour or 4 hour. It's okay. But for swing, some people use 4-hour and daily. So 4 hour is a great time frame of choice because you can do it as intraday and you can do it as a swing. So you can mix it. Now the question is, I can see a question. If I want to be an intraday trader, I use 1 hour time frame. Then I use 1 hour to find setup, and what do I need to look for 4-hour time frame? What would keep me for taking the trade? Well, usually if you trade multiple time frame system or MTF system, you need to compare time frames. My Camarilla MACD analysis is not actually MTF. I can take a look at daily or weekly to see where the trend is going. But if I do the analysis on 1 hour and 4 hour and you see my POC zone, as you can see it in every analysis, that means that it's that time frame. It doesn't matter with the time frame. How I trade Camarilla MACD is I just watch the zone. I don't care if the zone that is the zone. So I can zoom in 1 minute time frame. I don't care if it's 4 hour or a minute time frame. The actual analysis is done on 1 hour or 4 hour. And my analysis, Camarilla MACD, is helping me to define entry zone, which is called POC. It's entry zone. Then I don't care anymore. I just wait for the price to enter the zone. So that is the difference between standard systems and Camarilla MACD trading. I know it's a big difference, especially for people who are not familiar with taking entries without any confirmation. Actually, you can see the analysis, which I post every day. There is no real confirmation in sense stochastic cross or I don't know, CCI above 100 or whatever. It's different. It's trading in the zone. So we are waiting for the price to actually hit the zone, and once it makes its first bounce in the zone, we open a trade. That is how we do it. That is how I do it on Camarilla MACD. For example, if you followed my New Zealand dollar analysis, which I posted today, you could have made 50 pips so far. Okay, I will show you probably, I don't know if you traded today, but it was intentional why I have chosen New Zealand dollar. New Zealand dollar analysis strictly said that T89 is in progress, guys. T89 pattern. And I said 60, 610 to 20 is the zone. Okay, so we saw a pullback here, and now the price is 60 pips in profit. Okay, it was a pullback here after the analysis, and bang, it jumped 60 pips at this point. New Zealand dollar was not prone to news event today such as euro dollar. So that is why I intentionally have chosen New Zealand dollar. So swing or 4 hour or on 4 hour or daily time frame is good for bigger targets. You can use trailing stop and you can make pending orders. But you will have overnight risk, macroeconomic risk, for example, news during the week. You need to have bigger stops, swap overnight, and it's low. So it's not for traders who want to have some excitement. Now, guys, even if you still lose from time to time, doesn't matter, because I know that some traders are basically, they know that even if they lose, they will make it up next time, and they are aware that market can change anytime. So you just need to believe in yourself, and how I usually say, trust your own guns. And definitely do not be afraid that sometimes days like this can wipe your profits. Today, guys, a lot of traders lost millions. So be aware that these days are not very, very often. So what you should do is stay away. Okay, target has been hit 0, 5, 20. You relax. Let's see what we'll do, what the price will do. Don't worry. There is always another day. It's not. Market is here. Do not chase the market. So guys, even if you are adrenaline type of traders, it doesn't matter. Don't do it on 4 hour daily. Try to stick to 5-minute time frame, 1 minute, whatever. Because I know that some traders actually trade for enjoyment, excitement. Even if they lose a lot of money, $10,000, $20,000 in a month. But they still want to trade because it's exciting. It's like a gambling, guys. I don't know if you ever gambled, but professional gamblers, I had a friend who was a professional gambler, one of top 25 in the world, in Europe, sorry, because he was also credited for his accomplishments in poker tournaments on Eurosport. And actually, I was sending some signals to him, and well, when I saw how he trades, really, he's a gambler. So he was able to margin his account in a single trade. That is what I really cannot do unless I'm taking a challenge. For example, raising $100 account to $1,000 account, which is really quite a challenge. That is when you need to take a margin, but you know, $100 is not much. But imagine trading with $50,000 and you put almost all your margin in a single trade. That's gambler psychology. But some people definitely love to trade as gamblers. So guys, I'm trying to teach you how not to be a gambler. But if you want to be a gambler, I always say you will have bigger chances to win on Forex than in casino. Casino you will usually lose, but in Forex market you can win a lot more than in casino. So if you don't want excitement, if you want to be a calm, if you have family to take care of, I don't know, your dog, your friends, then you will use 4 hour daily time frame. You just don't have the time to babysit every single entry. Now, when I said also, I mentioned investing, weekly or monthly time frame. Wow, guys, this is what I never do. But first of all, macroeconomics risk. There is a lot of risk during the year. So once your profit is gone for a year, you will become frustrated. Trades takes weeks. It's not very often. It's very often that it takes months and years, because one candle on monthly time frame equals to full month. 12 candles, full year. Fewer transactions, less spreads. It's news proof. It doesn't matter. Intraday news simply do not affect investing. It's not prone to intraday movement. Totally news proof. And it's only for investors. It's not for traders. And I say traders intentionally because investing is not trading. It's more like investing. Put your money and wait for profits if you can. So if you're able to wait really months and years, then this is for you, but it's not for me. I never do any analysis long term. I don't know what will happen next year. How can I know that? Does anyone know? It's just a matter of I don't know. It's like 50-50. You can say euro dollar will get to parity, and I don't know, a major bank, another bank will say, okay, euro dollar will get to 1.20. How can I need facts. I cannot trade just on, I cannot base my trade just on assumptions. So that is why I prefer intraday to intra-week trading. It's a great, I can say it's a great, how can I name it? It's just the best time frame for every single type of investor. It's an optimal time frame. So 1 hour to daily time frame, maybe 4 hour, I can say it's optimal time frame. So I'm not saying that you should exclusively trade 4 hour, because some systems take those trades much differently than I do. So, you know, I don't, you see it, I never wait for 4 hour candle to complete and then take a trade. I trade in the zone. So my zone is defined either on 1 hour or 4 hour time frame. So I don't care whether it will happen on 1 minute, because I just need a zone. Once I define a zone, I wait for the price to enter the zone, and then I pull the trigger. So I don't care really about timing. And that is why I say, guys, session recap trades are valid for today, tomorrow, and day after tomorrow, because they are made on 4 hour time frame. If I did it on 15-minute, they would be valid maybe for next 6 hours, and it's over, even less. So maybe the optimum time frame is 4 hours, but you need to decide it yourself, definitely, because it's not the same, guys. It's not the same for you, for me, for Chris, for other traders. Some people would say, I cannot trade 4 hours. It's too slow for me. I like to be excited. I would like to try 1 minute time frame. Every type of trader is different. Every single of us is different. So it's nothing bad if you want to be a little bit excited about a trade and take your chances with scalping. But it shouldn't be your main purpose to scalp, because it's not that profitable. So let's say this is Australian dollar 4 hour time frame. Okay, and now watch this. When you go to monthly time frame, what happened with traders, for example, who shorted this candle here? Okay, because this was obviously a break of important level, but they didn't take their profits because of some reason. It doesn't matter what is the reason for that. It doesn't matter. But for some reasons they forgot to take profits here. And now what happened? Look, 2 months they had excellent profits for 2 months time. Okay, guys, this is 2,000 pips, but it's 2 months. And what if they were so assured that Australian dollar will drop even further, because their system told it would, and other analysts, long-term analysts, also told them it would, and they didn't take any profits. Now they're either in a huge drawdown or they lost trade. 3,000 pips, guys, loss, and now at this point they're 600 pips positive. Now let's say that they want to actually take profit now. So okay, they're 600 pips positive. This is funny thing, because they initiated their trade in 2008. So 7 years after, they're only 600 pips positive. That is something which we usually do during our session recap in 1 month or 2 months. Let's say 3 months time with session recap trades. And it took them 8 years to be 600 pips in profit. It's not for me, definitely, and I never do any long-term analysis. If you switch on 4 hour time frame, you can see a lot of opportunities, guys. You remember when I said that Australian dollar will go up from 71.50, and actually it's going up still, you see. It's easier to trade on 4 hour than on monthly, a lot easier. First of all, you can see some patterns, inverted head and shoulders, wait for a break, go long. Remember our analysis. It's easier, and it's more optimal than using monthly time frame to trade. 7 years of waiting for some profit which is not that good. For 7 years, only 600 pips. So this is the difference. Now, if you go to 5-minute time frame, great day for scalpers. Scalpers were good most of the day. But look at this, V-shaped reversal on 5-minute. Actually, if scalpers try to short it here, it wouldn't do any good. So good, it's everything good while market is trending. As soon as the market stops trending, and then we are in problem, guys. As soon as there is no trend and you start to open a trade, that's not good. You can lose a trade. The question, you have MACD in your charts, but I don't remember you mentioning in your analysis. I mention it, but I mention it strictly for divergence. Also, how I also use MACD, try to watch my last webinar on price action trading school. I explained MACD pro tip, and the webinar will be uploaded tomorrow. So tomorrow you will find it on Admiral Markets Price Action Trading School channel, and you will see how I also use MACD. For the analysis, I use MACD as divergence indicator, and very often you can see that I pinpoint divergence with MACD. In my opinion, MACD is best for divergence trades and analysis. So guys, that is what you need to decide. My advice is 1 hour or 4 hour time frame. At least if you follow my trades, you will see that my analysis is done on 1 hour and 4 hour, and we usually wait for the zones. Other systems favor crosses, candle closes, but it still is that 4 hour time frame can be optimum. So let's cut it to the chase. If you have the time, if you don't have any day job, then you can do scalp and scalp swings. If you have your day job, it's hard for you, you usually will use 1 hour or 4 hour time frame. If you are not so much in trading, you are more like investor, then you will go from daily, weekly time frames and more. So you need to decide it about yourself, your style, your psychology, and your general excitement about trading. As I said, gamblers would never trade 4 hour and daily. They prefer to trade lower time frames. So guys, this is all. If you have any questions, feel free to ask us. If everything is clear, we can assume the webinar is over, so we can proceed with calling it a day. And of course, be patient until Monday. We will have new session recap, new live room with Chris, and of course, new analysis. Thank you, guys. Do not forget to follow us at Admiral Markets on Twitter. And guys, of course, if you want to get a full, I can say, deep analysis, then read our Admiral Markets website each day, because that is where our analysis is first posted. Thank you, and I wish you to trade safe as always. Cheers.